One more set of good numbers, Praj Industries, and hear out what the management had to say when I had a chance to speak to the MD and CEO Shishir Joshipura, and begin by asking him the factors that have led to the expansion in margins.
Yes, so Dheeraj, it's been a good quarter for us, and I think this is indicative of the momentum that is building up in the sector in general. We are very happy with the progress that we have made, and what you actually see is a leverage effect that is kicking in because of the fact that we have done a very tight job of managing our costs when going was not good, and I think that leverage that is coming in now with volumes available and the fact that we enjoy a very significant market share in this business is helping us to post the results that we have posted.
Is it also pricing which is helping you? I mean, how is the pricing scenario looking now? Because I know that your order books would be full with people doing a clamor for making ethanol equipment machinery manufacturing. Is it coming at a better pricing?
I think it's a mixed bag in the sense that, there is also a question of viability for a job in terms of when a project is put up at what project pricing or cost it becomes viable. So I think there is a restricted ability to price it up. But I think what's very important is that, A, we are able to bring in innovation in the play, which is what we are aiming to do as we go forward. And that is when we start creating higher value, we are sure that we'll be able to capture higher value with our customers. Also, the business is just not, numbers that you see is not only the ethanol business for the domestic market. It is also reflective of what we are doing in the export front. It is also reflective of what we do in other lines of our businesses. So I think what you see is a cumulative result of effort of all our businesses.
Interesting. Actually, can you split it up for me? Maybe in Q2 or the first half of this year, or maybe the target that you have for the year as a whole. What's the split between domestic and exports thus far? Mr. Joshipura?
So we will look at a figure between our domestic and international business between something like 74% of our business comes from domestic markets and 26% will come from export markets.
And is the current order book, I would want a number there if you can share, I'm sure you can, the number that you can share for the order book, and whether the current order book is also placed that way, that about 3/4 of your order book is domestic and maybe 1/4 is exports?
So our order book is about 900 crores right now, in which we are looking at a similar split, more or less.
Sorry, a 50-50 split you said?
No, I'm saying similar split, the 74-26 that I told you earlier.
Okay, the same split. Okay.
Yeah.
And Mr. Joshipura, what's the execution timeline for this order book? Is this the highest order book that you've had in the recent past?
I think we have seen similar level in the past, very close to these numbers. But as we see it, the policy came up somewhere in the end of first quarter for the ethanol market. And we are seeing a good build-up. And as I've said in the past as well, that we are seeing an extremely good build-up of the inquiry inflow, which is of order about 35-40%. And we strongly believe that as we move forward, we'll continue to build on this base. So maybe this is a new base for us from where we will build the further order book.
Okay, and just typically what would the execution timeline be for any such order that comes into, 900 crores, yes, but would the execution timeline for the current order book be about 12 months or maybe slightly more than that? Can you give us some color there?
The order book, of course, the different businesses have different cycles, but fundamentally speaking, we are looking at an average about around 12 months.
Around 12 months, okay. Now, just before I come to the bigger discussion, just one last question on the current quarter and the outlook ahead as well. Your margin expansion at 6.8%, is that also the new normal between 6 to 7%, or would you presume that there could even be a possibility of taking it higher?
Yes, we believe that this is the new base from where we build forward.
Okay, so about 6 to 7% for the year as a whole, is that a safe assumption?
Yeah, that's very, very safe.
That's safe assumption. Okay. Now, you would have expected this question from me, this new policy for ethanol. 2 or 3 questions really, Mr. Joshipura, and you would be able to give us the best color. One, whether the set of orders that are coming in from the existing players, which is the existing sugar companies alone, or are standalone players who are not necessarily sugar manufacturers but setting up ethanol plants are also giving in large orders. I mean, I know of one company like that in Punjab called BCL, which arguably has placed a 100 crore order with you, and please correct me if I'm wrong there, but what's the split looking like out here?
I think the majority of the current capacity proposed to be put up still belongs to the mother industry of sugar industry. I think they are best placed to deliver because of the fact that the feedstock is available at doorstep, is captive, so they're able to correct some of the other grades of feedstock, the B molasses, sugarcane juice. I think in almost immediate future, a sugar company is obviously very, very nicely placed to leverage what they have. So we also see the same thing that most of our exports are from the sugar mills and not from standalone plants, if you can say. So on the other hand, if you look at the 2G technology, then it is completely standalone because there's an OMCs which are putting up that plant. So there is no, because the feedstock is not connected to production of sugar, right? So that's a very different landscape. So depending on where the natural feedstock facility lies, I think we are seeing initial capacities being put up or proposed to be put up.
But so what's the split there? I mean, can you give us some color there? Is it possible?
I would say 95% of the inquiries today are from sugar mills.
So orders and inquiries both, 95% are still from the sugar companies. It's a very small minority from the non-sugar players.
And it can come in any form in terms of expansion of a brownfield capacity or a completely new capacity being set up.
Okay.
But the feedstock remains the primary determining factor.